Hello, it is the 20th of July, 2011, and welcome to today's silver analysis. I'll make this a little bit quick. I want to go over more on Fibonacci, but today I don't have time. It's somewhat important, so I will be going over it anyway. And we're looking at this quarter day chart. I've been talking a lot about these trend lines of late, and this trend line here, which I didn't draw straight, but straight enough for me to say I'll go with it, has pierced below it, but still in the area for the direction of support. Over the long-term time frame, it's been stabilizing in this sideways consolidation after the big fall, if you will, and the Fibonacci retracement from the big highs and the big lows works out to the 39.11 because I take the $49.81 highs and I divide it by the lows, which are 32.32 down towards in here. So we'll divide that by 32.32, and we'll put this to the power of 38.2%. Multiply it again by the low. That's the Fibonacci calculation, which is 38.12, 38.13. Therefore, in that area, the Fibonacci line would be recognized somewhere in this area in here. Therefore, when you find support at previous resistance, then that's a very strong thing. And what's going to happen now is either we're going to be having a breakout, a break above this line, or we're going to have one heck of a failed move, breaking above the line and having a nice continuation move lower. Which will be the case right now is very difficult to determine. Therefore, to help us out, we'll use the Fibonacci from this low and this high now. Therefore, we know the high is about $40.80. So we'll take 40.80 and we'll divide it by the low, which translates into about $33.30 approximately. So we'll divide those two numbers. We'll store this in the memory bank, so we're going to need two of them. We'll take this number, put it to the power of 61.8%, and multiply again by the low, which is $37.75. So it's still well above that level, but again, this is just another one that's in the area of previous resistance and the big support level that it has to stay above. And the final must hold level is this one to the power of 38.2%. Multiply it again by the low, which gives us a figure of about $36 an ounce. 36 is a must hold. 36 on here is located roughly in here. Now, I was expecting that this Fibonacci level was going to be around here somewhere, which would have meant this one to be around here. So the market didn't go up as high as I once thought that it would, and it still can go high to increase this level if, of course, it makes this bottom where we are right now, because overall, this is a good thing, this sell-off, if, of course, you're looking for some pattern or some sort of formation to give confirmation, because now a break above this line or silver, $41 silver now to me is moving towards the steps towards confirmation. As far as volatility is concerned, well, actually, we'll get to volatility after this. First, we got the daily chart. And again, back up to this Fibonacci level, and it's still above this 18-period average. The highs is at 37.75, which matches up with the Fibonacci. 36.31 for the average of lows, and that would match up close to the other Fibonacci. And $37 is the 18-period average of closes. As far as the volatility is concerned, there was a slight movement in here that's brought it close to in here, but we're really showing the reversal trend. As far as if you see a chart like that for a stock, once it breaks this resistance point, then you're really looking to go long. And final chart is the direction from the 50-day moving average. And I'm looking for a clear breakout pattern above the 20% mark. It's when above it. The key number is 18%, and as of 10 a.m. this morning, it's 17.5%. Therefore, a break above this high, which is pretty much the same as a break above 41, would give this a buy signal. Thank you for watching this video and have yourself a magnificent day. Bye-bye.